everyone, and welcome to the Friday, January 29th installment of the Silicon Insider, the only uncensored look at life and business in Silicon Valley. By the way, you're the TV guy. You should be reading this stuff instead of me. I'm just a print guy.
Your show, my friend. You read.
With a terrible tenor voice. Okay, my name is Mike Malone. I've been covering this town longer than anybody. I'm here with our special contributor, Scott Budman, business and tech reporter for NBC Bay Area. As you'll notice again this week, in honor of the California COVID lockdown, not much longer, we hope, we are creating this podcast from our respective homes via Zoom. Our producer is Jordan Henderson. More about him later. Our East Coast correspondent is Bob Grove. And our host for this podcast is, as always, the Silicon Valley Business Journal. Okay, Scott. Everybody knows what we're going to be talking about today. The big story of the week.
Yeah, this is one of those one-issue weeks. Yeah, GameStop and Robinhood. And Robinhood, by the way, not many people knew until the last couple of days, is a Bay Area company headquartered in Menlo Park. And That's where the protesters were yesterday. That's where the trading frenzy has been. And it is an amazing, amazing story because, and I know you and I have been through the dot-com boom when, things got crazy and frothy and people made fortunes and then lost fortunes. We've seen the first part of that so far during this week.
This is seriously frothy. This is foamy. I mean, this is like, the stuff they put on runways when planes are going to crash.
And what's interesting here, though, is it's not just, hey, an entire herd is following these tech stocks. What's interesting here is how targeted these companies that people are buying are. And it started largely with GameStop. This is a company that's been around for a long time. There's nothing sexy about it. It's a brick and mortar video game seller with huge short interest.
Everybody thought it was dying.
Right. And if you
Everybody thought GameStop was dying.
Yeah, well, it hasn't done much in years and years because, again, everything is streaming and downloadable and all the games are right there at your fingertips. And if you looked at its stock, which not that many months ago was trading for $4 a share, it had heavy short interest by the big hedge funds, which is how this whole thing started. It seemed that the Wall Street big guys were really satisfied with just taking profits on shorting the stock, which means essentially borrowing and making a bet that the stock will go down. And the
hedge funds.
And that's part of, I think, why these guys on Reddit are getting into GameStop and some of these others saying, let's take these hedge funds out to the woodshed and really try to shift the dynamics of who is running Wall Street, which we haven't seen in forever.
I have to say, I basically ignored GameStop for years. When my kids grew up, we weren't buying games anymore. I don't think I went into GameStop for the last 10 years. But I buy my coffee in Santa Clara in a little strip mall, and there's a GameStop there. It's not much bigger, it's smaller than a 7-Eleven. But there's been a line of people in front of it all through this pandemic. And suddenly it was back in the front of my mind that that GameStop was still in business. And now it's become the locus of the attention of the financial world. And when it closed, it hasn't closed yet today, but I was looking at, I think Fox Business or CNBC this morning. It's at $500 a share.
Well, so right now, and it's almost worthless for us to even mention a price because within a minute, it changed.
It's going to change.
Right. Yeah, so today it's been as high as almost 400. Yesterday it reached 470. And right now it's at 335, which is still up 75% just today alone. But yesterday the swings were such that it was at 470 at its peak and somewhere around 130 at its valley. So somebody in this frenzy bought GameStop at 470. Were they still holding at 130? And what was going through their minds?
Yeah, they're writing it down right now, including, Barstool Sports. They've taken a shot on this too. And they've been sort of in the center of all of this. Well, let's go back to first principles because this is a complicated story, but I think it has enormous implications for the future. I think this is a glimpse. I mean, they're calling it the first shot of the French Revolution or Lexington and Concord of the financial markets. But essentially, we have a Reddit subgroup called Wall Street Bets, and they shrewdly looked at a number of companies, including let's see, GameStop, AMC Theaters, BlackBerry, Nokia, companies nobody thinks about, at least in our world anymore, and said, wait a minute, all these big hedge funds are just shorting these stocks like crazy. Why don't we intervene and drive it up? We can have two things occur. One of them is we can make some money, though that seems almost incidental to these guys, because the big thing is we can crush these oligarchs. The game seems to be fixed. We're not allowed to play. We're just everyday people, and we don't understand puts and calls that much anyway, and the whole options game. But the big boys have been playing this for their own benefit for the last 30 years. And the government seems to be in bed with them. Wall Street itself seems to be in bed with them. They get fined enormous amounts of money. They just pay it off and keep going. They get kicked out of trading, and then they end up coming back in. It all seems like an inside game that we're not allowed to play in. And these guys brilliantly just took it on. I had to admit, when this first happened, I was ambivalent. One of them was, this is kind of a dangerous precedent, sort of mob rule, racing in and out of stocks and creating all of this chaos in the marketplace. But a little part of me just laughed, because these hedge fund guys, they've been living like Russian oligarchs. Cohen has a art collection his art collection is worth $1 billion. They live like kings. They seem to be legally invulnerable. And to have them taken down doesn't break my heart at all.
And that's part of the goal. This is different from the day trading that we saw so much of in 1999 or even 2008 when 2007 when the markets were hot. This is hold on and let's move the price so much higher. And like you said, get those the short guys to have to cover their positions. And in order for short positions to be covered, you actually have to buy the stock. So they're riding this higher and higher, instead of like the day traders who say, I made a few bucks here, good, let's call it a day. I had a good day, let's move on. They're trying to do this with not only some of these stocks, but some of the cryptocurrencies, and say, let's hold on for a long time, make everybody buy. And I don't know what their end game is. It certainly wasn't 480, but their end game is still yet to be determined, I guess.
Well, they've reached the point where these hedge funds have had to pay on their orders, on their options, and the hedge funds are now down $71 billion, which is a staggering number. Banks are going to lose about $50 billion so far, which is more money than they lost during the 2008 real estate bubble. And meanwhile, these retail traders have finally said, we're not going to play in this fixed game anymore. We're going to blow it up and we're going to start over. Now, it seems like a pretty dangerous time to be doing it. We may be heading into a recession coming out of the COVID lockdown. The economy's pretty fragile right now, and to be exploding it like this, to be storming the Bastille at this moment is kind of a scary thing. But on the other hand, I really sense these millennials out there are just tired of a fixed game. The winners win. They take the money from the rest of us, and the elites always take care of their own. And we see this again. Robinhood today. Now, Robinhood is handling most of these trades, and turns out that on their board they have all these former SEC people, and they may have been colluding with the big investors, the hedge fund guys, letting them know that they were going to stop trading. So they have stopped all buying of a whole bunch of these stocks, especially GameStop.
It did yesterday, yes.
And then the millennials immediately turned around, hit them with a class action suit this same day, like they knew this was coming. It just seems like the establishment, I got up this morning, I was thinking, where have I seen this before? And I thought, well, Mario Savio and the free speech movement at Berkeley, your hometown, we thought this was just we're allowed to say dirty words at Cal. You know, we're allowed to say what we want, and we end up with the 60s. And I get the feeling that something bigger is happening here. That these smart millennials who are just incredibly technologically astute, are organizing these army of Davids, and they're going to blow up every one of these ossified institutions one after another for the next 15 years. Now, I may be wrong, but I just get the feeling there's a movement. This is captured. Don't you get the feeling it's captured entire generations' imaginations right now?
Well, I think it is timely. I mean, for one thing, you've got these people trading because of what they read on a social media platform, Reddit. That's very modern, very now. Trading on an app that makes it super easy to trade, Robinhood. You can download that on your phone, load up some money, and you're off to the races. So
the company that said democracy in trading, we're going to bring it down to the little people. And then as soon as the little people took advantage of it, they went, oh, no, we're shutting you down. You can't do that. And then we found out, Janet Yellen, our new Secretary of the Treasury, got $800,000 for a speech to the elites. Yeah.
Right. And so you've got both the Robinhood aspect and the Sheriff of Nottingham aspect of it. But really, this is for the time. And so now, yes. And also for the time, you mentioned, well, should they be doing this during a pandemic? From what I hear, a lot of these people are taking their stimulus money, whatever they have, and putting it towards this, which on the surface seems like a crazy thing. I mean, back in the day, stimulus used to be how you pay your rent, or maybe, you know, if it was good times, take a vacation. Now it's apparently how you bid up, you know, long forgotten stocks. But that is a very timely thing. And I think people will look back on this, depending on what happens with Robinhood, which, by the way, is trying to go public during all this. That's perhaps on hold. And what the SEC does.
I'm not sure that's going to happen anymore. Do you think Robinhood's really going to go public now? I'm not even sure Robinhood's going to be alive in another week or so.
Yeah, I mean, I think it'll be alive. I just don't know. Right? It's going to have to deal with the fact that it is cozy with some of these hedge funds, even as it, you know, its own name, Robinhood, like you say. So once again, Wall Street is sort of creeping in and saying, hey, we're this big monolith. We control things. And right now, the young traders are still fighting and saying, no, we want to control things. You know, we want GameStop to be a $400 stock, not a $4 stock. Yeah,
and they're going to move on to something else. I mean, we heard from our producer Jordan, right? And he's in.
Right.
Now I'm going to miss. Is it Dogcoin? Is it
Dogecoin?
Dogecoin. Okay, well, coin, because that extra E in there messes me up. Jordan got that, and that was literally a joke cryptocurrency, right?
Right.
It began as kind of a meme. It's got a dog on it. You buy it for a penny. Well, Jordan, I wish Jordan was here to explain it, but he got in on it, and he's quadrupled his money in the last few days.
But so interestingly, Dogecoin was 1 penny a few days ago. It's now, last night I was watching this, it was about 7 cents. Now it's about 5 cents a coin. So it's nowhere near where Bitcoin or any of these other crypto guys are, but it is, I mean, it went up 700%, 800 1 point last night.
Well, by the way, when you mentioned Bitcoin, Elon today, of course, said a good thing about it and drove it up, what, $15,000 or something?
Right.
But anyway, I think this is our future. We're going to see these little bursts here and there. They try to suppress it in one market. They try to suppress it in one form of wealth, and it's just going to squirt out and pop up somewhere else. They're going to be playing whack-a-mole of this. The establishment's trying to stop this, and they're going to come crushing down next week on the Wall Street Bets guys. But they're not going to be able to stop it, because this is going to become a wildfire situation all through the U.S. economy in the months ahead, because these guys have figured out how to do it, and they're going to keep playing it. And they're exposing enormous amounts of corruption out there, which is fueling the fire as well. I mean, if you really feel like the game is fixed, then why not burn the game down? If I was a 25-year-old, I'd be doing the same thing, I think. I mean, because you're not going to win. The way it looks is the big boys are only going to let you win a certain amount, but in the end, it's like a casino. They're going to take the money from you. And that seems to be the consensus of the millennials right now. And they're not going to play it. They're going to play a different game.
We will see. This is a week that will, I agree, launch something. I don't know exactly what, because you're right. Will the big guys continue to let a Reddit message board determine, how people rally? But maybe it's a movement whose time has come. Like you said earlier, the hedge funds have had too much control over this. The regular person, the regular family investor really is just sort of along for the ride. And maybe they don't want to just go along for the ride anymore. They want to start what the term is always making the markets. Now we've got some young people with their stimulus checks on Reddit making the markets. That is a 2021 sentence right there. And we'll see where it goes from here.
Yes, it is. I mean, Glenn Reynolds years ago wrote about the army of Davids. Everybody's been predicting this. Well, here it is. It's now arrived. And my sense is it's not going to be confined to the financial world. That this thing is this model this new paradigm is going to erupt all through American life. It may happen in religion. It may happen in sports. It may happen in government and in politics. I mean, this is a new model and it's revolutionary. And right now there are no firewalls against it. Nothing can stop it. And they're going to try, but they're just going to make martyrs out of the folks that did it. And it could keep going. It could literally, we've been talking about this radical change in I wrote a book beginning of the last year about this fundamental change we're about to go through, the complete paradigm shift, a phase change. And boy, I really got a shiver up my back looking at all this stuff the last few days thinking, here it is. Get ready, folks. The world's about to turn upside down.
And we'll see. And I still worry about that one person out there who bought GameStop at 480. Is that person going to lose?
I think they're going to get killed. I think they're going to get killed, but they're going to say, hey, it was my $600 stimulus check. I turned it into, $3,000 and now it's down to worth $400. I had a hell of a ride.
Just earn caution.
Oh, no. Oh, you and I don't play stocks because we're not allowed to, but this is why I wouldn't anyway, because I've lived long enough to see enough of these bubbles not to mess with them. But as an outside observer, boy, this is a really interesting time and scary. I have a bad feeling about this spring. The economy has just got too many vulnerabilities. And whenever I feel like I'm starting to defy gravity, when the world is starting to become incoherent, that's usually a time that, you're right. Your instincts are usually right when you start feeling that way. And I've got a little vibe that way right now. And it's worrisome. It really is. Okay. Speaking of corruption, this is going to be interesting. The state of California, EDD, it's I guess the Employment Development Department has now admitted there may be $10.4 billion in payments for fraudulent claims because of the pandemic. $10 billion is a massive amount of money in our state budget. How the hell did this happen?
Well, this was a story a little while ago. Apparently, they were using people's names who are prisoners. Scott Peterson's name came up. You remember Scott Peterson, and filing unemployment claims on behalf of them, and then pocketing the money. And the EDD, I don't want to say they let it happen. They're understaffed. It did happen. And so now, when they are needed the most because of the number of jobless claims that are so high and coming in so quickly, they are dealing with all this fraud in addition to being understaffed. And it's a terrible time right now for EDD and a really rough time for those trying to get their unemployment claims filed and get the money because there's all this stuff going on right now in that office.
Well, I mean, yeah, but we didn't know the magnitude, did we? I mean, $10 billion kind of stands out. I mean, that's 10 zeros. I mean, that's a lot of money. And
this was widespread, and we don't know exactly how wide yet, and that's part of the problem. They're dealing with names of people that are, literally prisoners. So how do you know, who collected and who didn't, and how many claims were filed? So this is going to be a while before it's cleaned up.
Yeah. So looking at all the aggregation of events, we have that. We have mismanagement of getting the vaccines out in the state. We have the lockdown suddenly ends without, when the numbers that we see in the hospitals haven't really changed, but all of a sudden the governor lifts it. And the state records people will not give us precise details on COVID because apparently we can't cope with it. I mean, at a time when people are leaving Silicon Valley in the state of California, partly because, they just announced the 10 worst neighborhoods, most dangerous neighborhoods in the United States. They use a bunch of computer algorithms, and 7 out of the 10 are in San Francisco and LA. Okay, that includes, East Side Chicago and everything else. So with all of this, you can't help but feel this can only accelerate the departure, the exodus of people out of California. I mean, the state seems to be horrifically mismanaged right now. And, that on top of everything else, it seems like we're in a worse state than the state has been in my lifetime. Am I correct on that, or am I just reacting?
No, I mean, that's been aside from the business and the tech world, that's been a criticism of California for a long time. And it really usually just comes back to money as far as why people are leaving. And in this case, money because rents got so high during a down economy. So people who were renting can't afford it. And then, the tax burden of California versus a place like Texas or Miami, they're trying to make incentives. We haven't seen an exodus. We've seen a couple of companies. We've seen a number of people from San Francisco because of, the jobless thing. So I don't buy it just yet because it's what we hear literally every year. And literally every year, California is still as stuffed to the gills as it was. Mismanagement, yes, we have a huge tax base. We should not be dealing with this much homelessness, with the education problems, right, et cetera, et cetera, et cetera. But
how many low cost houses could we build with that $10 billion that just got pissed away by incompetence?
Right. And we've talked to the people who build the low income housing, and they're as frustrated as anyone because there are some well-meaning funds or nonprofits or tech companies even that are putting money towards them. And they're trying to get through the system that is also very medieval to get these things built and to make housing more equitable. And that's a huge issue in a place that has seen such growth and that wants to see startup growth. There has to be low to middle income housing when you want to bring smart people in and say, hey, stay here. You won't make money for a while, but you may change the world and there may be a pot of gold on the other end of it.
Okay, so here's the next project for those Wall Street Bets kids. Go fix that problem. Go fix California's, incompetent management problem. All right, next up, earnings. You're the earnings guy. You cover it on a daily basis. Well, we had AMD, Microsoft, Apple, Facebook, Tesla. Tesla hit its revenues, but didn't hit its profitability level? Is that what?
Well, I mean, they even more, they're more of like, I think the Netflix model, Netflix, you always want to see the subscriber rate because that means future income. With Tesla, you want to see the cars and the production. They're doing fine. I mean, their stock has been ridiculous. I was impressed overall. There wasn't any company that stood out. I mean, Apple moved $100 billion. They had an iPhone record during a pandemic even, but it just shows you people are looking at screens more than ever. And if you're involved in that area, whether it's hardware like Apple or software like Microsoft, or even chips like AMD, it's bang, 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 the dominoes. Everyone is doing well in this big tech space. And that tells me that there will be some job growth, even as the state and our economy struggles. I agree with you through the spring. So at least getting
Apple had good numbers, but didn't a lot of it come from China? Aren't they really growing fast? Their revenues growing fast in China?
Yeah, for all of former President Trump's bluster about China and tariffs and cutting back, and the relationship there has been really strong with companies like Apple and with Tesla and with the chip guys, and they have become a huge market for American goods and companies.
But Apple's simultaneously talking about moving a lot of its manufacturing out of China. I mean, that struck me as an interesting contradiction. They're doing
Yeah.
better, but they're leaving.
Right, which is not so much something that affects, the bottom line or what people like to see on earnings day. But yeah, I mean, is that relationship going to sour? I mean,
Let's talk a little bit more about Apple, because Apple and Facebook now seem to be in a battle royale. The Facebook, I guess, considers Apple now its biggest enemy. And meanwhile, Tim Cook decided to say Facebook's business model has real world consequences, including violence and reducing public trust in vaccines. I mean, that's an uncharacteristic remark for a CEO, and especially for a careful one like Tim Cook. What's going on here between these two companies? We know the beginning, it had to do with privacy and all that, but this thing's turning into a real Donnybrook. And I don't understand why a software company and a hardware company have that great of a need to take each other out.
I think it really comes down to privacy. And, Apple is trying to make a move, and it's, they do what they can to say, hey, we're the company that's going to protect your privacy. Facebook obviously is not. And so Apple has said, hey, look at Facebook. They're messing with your privacy and we're not. Facebook is like, wait a minute. You sell iPhones. You literally track the entire human race. And what Facebook is also trying to do is, I think, because remember, Facebook is caught up in the antitrust, world right now. Apple, not so much. So what Zuckerberg is trying to do here is saying, hey, by the way, that iPhone or, Apple looks awful lot like a monopoly. Yeah, I think it is, but they're trying to say, hey, if you're looking for antitrust, look over there. If you're looking for privacy problems, look over there. Now, obviously, that's the pot calling the kettle black.
Facebook is saying, Apple, you're an evil monopoly, and Apple is saying, Facebook, you're helping burn down cities. I mean, is that kind of the game that's being played right now?
Yeah, and Cook's big thing for a long time was privacy. And he would say, we protect your privacy. We don't do anything with your data from your Apple Watch or even your phone. We don't do anything with that. We don't monetize it. Look over there at Facebook, because that's how they make their money. And so Facebook is trying to fight back and saying, well, wait a minute. We have things in place to protect you too. And by the way, they're bad. So, it's kind of a schoolyard brawl, but with, 19-year-olds that for whatever reason are still in high school. They're the big guys. They're doing fine. They're too big to fail at this point.
Yeah, $2 trillion companies slugging it out.
Right.
I'm not real upset. It's kind of fun. We consumers always benefit from these fights, so I have no problem with that at all. Okay, finally, Intel. There's some people are betting out there that Intel actually may do better in the stock market this year than AMD. No one would have guessed that 6 months ago, but the return of Pat Gelsinger coming in as CEO seems to be having a massive transformational effect. And he's saying all the right things like, I'm going to rebuild Intel by the Andy Grove playbook, and he just got Sunil Shenoy, who's rejoining. He left in 2014 after 33 years, obviously upset with the changing corporate culture. He's coming back as VP and general manager of their design engineering group. Glenn Hinton, I mean, these are names from the past. I mean, we covered these over the years. He's rejoining the company to work on a high-performance CPU project. And Guido Appenzeller is joining from VMware as CTO of the Data Platforms Group. And this is like getting the band back together, and going out on a reunion tour. I mean, it'll be interesting. It's exciting. I think it's the most interesting news in the Valley I've read in a few weeks here. And boy, if they pull it off, that'll be amazing. And it really shows what kind of respect this guy has held in, that he can come back. He's not even there yet. He doesn't even start for another week, and he's already filling all these positions with company veterans who bring with them the old culture and will try to reinstate it.
I mean, that's what Intel has to do. It's made some missteps recently and struggled for it. AMD took over. AMD, by the way, had a very strong quarter. Lisa's powerhouse CEO. People for years weren't able to name Intel's CEO. That's a big difference between those two companies. And imagine saying that, 10 years ago, wow, everybody knows Intel, but AMD, they're sort of the side player. That has switched. Now, granted, AMD is still half the size and market value as Intel. I just checked, but they're really, really rolling. And
Yeah, you're not been around long enough to not say, oh, they have a market cap of such and such, so they're unbeatable. I mean,
right.
The whole history of this industry is bodies of big companies littering the landscape, despite
Right.
their enormous market cap.
Yeah, and so there's much left to go in this battle, but chips are hot again, whether you're AMD or Intel. Look at Qualcomm, look at NVIDIA. Chips are very hot, and those two companies, they may have old school roots, but they need to get modern, to compete.
Hey, if China keeps threatening Taiwan, those chip companies may be the most important firms on the planet pretty soon. So, okay, well, that was a hell of a week, Scott.
We'll be back next week, and I'm really curious what happens, especially with the whole Robinhood saga.
Yeah, we'll see the backlash next week. These guys, these establishment guys got caught with their pants down, but they're pulling those pants up right now. And they're girding their loins for battle.
That's a great analogy.
So that's it for now, folks. You can find us on Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Google Podcasts, and Apple Podcasts. See, this is why you should be doing this. And now YouTube. Stay safe, stay dry, and have a great weekend. We'll see you next week. Bye-bye.